Hello and welcome to day number 67 of our Travel Trader series. And today I want to talk a little bit about your best trading tool ever that you can have. And that's not some fancy indicator or something great. It's a very, very simple tool, but the most powerful. In fact, it's the one that every time one of my students struggles or they think their results should be better, it's the very first thing that I am asking them about, and that is, do you have a trading journal? And in some cases the answer is no, and then it's really tough to help people, because if you don't sit down and write down what you're trading, why you're trading, and so on, it's very, very hard to help someone or to guess how to improve some trading. So it's very, very essential. That's why I did an Excel spreadsheet that you can download for free from my website or Facebook, and I can put a link in here as well if you like. However, it's the number one thing that increases your trading at very, very fast pace. So we want to know certain things when we trade. So one of the first things is we have the number of trades. So we have the consecutive numbers where we see how many trades we did. So we have some order in it, and we can see what are our early trades and what are the later trades and so on. And then I personally like to group it into 10, into a packs of 10, so 10, 20, 30, 40, 50 and so on, and see after every 10 trades what is my percentage. So let's say I would make 14% here, and I would make, let's say, 3% here, and I would lose 2% here. Then I can see after 10 trades how much I would do, and I can compare that, whether that number gets better, stays the same, and then I can see how my trading develops over time. And sometimes it's not that just your trading needs to develop over time, but markets develop over time, and therefore you want to know, first of all, the assets that you were trading. So whatever tool you use, is it futures, is it CFDs, is it options or whatever, you want to know the underlying asset that you were trading, also the tool, and you will put that into this asset column here. You want to know when you entered something, and you want to know when you exit, what your entry price is, and of course you want to know when you exit something. So that's this column here. So the date when you closed your trade, so that in hindsight, if you have any questions, you can go back in your chart and have a look. Okay, how did the chart look like? Did I make any mistake, or did I see something that wasn't there? Sometimes people send you weird things, and if they look at it a week later, we cannot see the things that they traded themselves. So it's very, very important that you know when you entered a trade, when you exited it. Also, what was the price that you paid, and the price that you paid, and what was the price when you exited it. So did you get stopped out with a loss, or did you make some money? And ideally you want to know whether you were long or short in the market, so whether you wanted prices to go up or whether you wanted prices to go down. The next thing that you wanted to know is if you made money on it. So first of all, your profit and loss. So was it a positive or was it a negative trade? And be aware that that your trading will develop, and when your portfolio grows, let's say you have I don't know, 10,000 portfolio here, so making 1,000 here is a 10% gain, which would be great. However, if your portfolio develops, let's say from 10,000 to 20,000, and you make the same 1,000 here, it's not the same result, because on a percentage basis, now as you're trading with 20,000, that would go down from 10% to 5%. You want to be very aware how big your percentage is, and that's mainly what you should focus on The money is just a byproduct. So if you focus on increasing percentages, increasing points, and you are able to, let's say, get away from, oh, that's 100 euro, or what you can buy for, let's say, losing 50 euro, whatever the numbers are for you, the more you are detached from it, the easier trading will become, because your emotions won't interfere with it. So that's why I love looking at percentages. I don't really care if someone starts with 1,000 euro trading, or with 10,000 or 100,000 or a million. I want to see great percentage increases over time. And one of the most important things is the reason why you entered it. Why am I so focused on what the asset is and what the reason to enter is? First of all, you might trade something, if you don't specialize in something, you might trade indices. So you have your indices. You might trade commodities. And you might trade, let's say, things like forex. And after a while, when you trade, so let's say 20, 30, 50, 100 trades, you will realize that maybe you really don't make any money in, let's say, indices. You lose money, so that's plus minus zero. That you might lose money in commodities, but you're really killing it in forex. So guess what? You will stop trading commodities, you will barely trade any indices, and you will focus on what you're really good and try to get better at that, and then kind of specialize and make more of these things. And the reason to enter is the very same thing. Let's say you work with different indices. So you have indicators 1, 2, and 3. And you trading them for several trades, and then afterwards you want to be able to filter these things, and you want to see, are you really good at 1 or 2 or 3, or what's your best performance? Or sometimes you wonder that, okay, for some reason you were earning a lot of money, and now all of a sudden you're like just changing money, so you're losing as much as you're winning. And you want to know, for example, anything, and that's why here's some space. So you want to put in a comment on anything that you see. For example, right now, the volatility is very, very high. And one of my trades on Friday that I put in my trading journal told me that as I wasn't in front of the computer and I was losing 1,500 euro, that the settings for volatility weren't right. So we got stopped out a little bit. Unfortunately, I was more focused on speaking and meeting people, former students, and interact with them. So I wasn't sitting in front of my computer, otherwise I would have been aware of the volatility. So I kind of guessed what the volatility that day might be, and the guess was slightly wrong. That's why the trade went into the negative with 1,500, rather than as the days before we nearly earned 3,000 euro. Like I think 4 days in a row we nearly earned something between 2,500 and 2,700 euro each day. And then on Friday, so yesterday, we lost 1,500 euro. But one of my comments would be that I miscalculated or wasn't aware of the real volatility, and therefore I got stopped out with a few points, while otherwise the trading idea of the German market going down was absolutely right. So with a little less volatility, that would have been a very, very winning trade. And you want to know these kind of things so that you can adjust. Next time we have a phase where we have high volatility, I will try to be in front of the computer, or if not, I will reduce my position size and will give it a little bit more room so that I won't get stopped out, but rather make money. I might not make 3,000 then, but only 2,500, but it would be safer than getting stopped out in a drawback in the markets. And that's why it's so important to put in the reasons, because you want to know if you have different strategies, what's your strategy, or is there anything that really, really works well for you or not. And then you can use these things, these insights that you gather from all of these data, and increase your trading. And if you think about compounding, something that we talked about in earlier videos, you will realize actually that you have a lot of change in your results if you are able to just increase your trading a little bit, because that will give you a little bit more in return, and that little bit more in return will sum up into huge and enormous profits over time. So I hope that this little lesson was helpful for you, and that you start using your trading journal as one of your main tools to develop your trading. If you haven't started yet, I hope you did. Otherwise, if you want to have a trading journal, you can download it. I'll probably put a link on it later on in the comment section. But this is your number one tool, because if you don't know what you're doing, you simply cannot improve it. If you don't know what you're good at or what you're bad at, if you ask students about, okay, what's your best asset, where do you earn most of the money? Is it forex, is it indices, is it commodities, is it selected stocks or whatever? Or what's your strategy where you're earning most money? And they guess at it, they are pretty much always wrong. And if you filter it, you will find out where you're good at, and you want to do more of what you're good at and less of what doesn't work for you. That's all right. If something doesn't work for you, just leave it and do the things that come easy to you as a second nature, and start earning more and more money. So I hope this was helpful for you, and that's our little lesson for today. Looking forward to give you another video tomorrow, and then we will talk about another topic. So I wish you a great evening today, and I hope that you enjoyed it. Looking forward to talk to you again tomorrow. Have a great evening, and goodbye.